Welcome to the Deep Dive. We sift through the latest market intel, earnings calls, reports, you name it, and pull out what really matters for you.
That's right.
Today, we're digging into Veeva Systems' fiscal Q2 2026 earnings call. We've done the homework so you can get the key takeaways quickly.
And Veeva's quarter, well, it had some interesting layers. Strong performance underneath, definitely.
But the market reaction wasn't quite a straight lineup, was it?
No, not exactly. It tells you a lot about investor expectations right now, how closely everyone's watching every single metric. It's a real case study in expectations versus what gets delivered.
Okay, so let's lay it for you. The headline numbers for Q2 looked pretty good on the surface.
Yeah, they did.
Revenue hit $789.1 million. That's up a solid 17% year over year. And it beat analyst estimates by, over $20 million?
It's $20.7 million, yeah.
A good beat. And the non-GAAP EPS, earnings per share, that came in at $1.99, also beat by about 0.09 cents.
So far, so good. Sounds like a clear win. It sounds like it. But here's the nuance we mentioned. If you look at the GAAP EPS, the official accounting number, that was $1.19, and that actually missed estimates by $1.11.
Okay, so that explains the wobble.
Exactly. Despite the strong non-GAAP beat, despite the revenue beat, the stock actually traded down after hours, about 3.7%.
So investors zoned in on that GAAP miss.
Seems like it. Sensitivity to the quality of earnings, maybe, and just really high expectations baked in already.
Right. So a picture of strong operations, really good underlying business, but the market reception was, let's say, cautious.
A mixed bag, yeah.
So what was driving those strong underlying numbers? Let's get into the financial breakdown.
Absolutely. Okay, so digging in. Subscription revenue was the main engine, as you'd expect.
Right.
Grew 17% year over year, hit $659.2 million. But it wasn't just subscriptions. Services revenue also had a healthy jump, 13% growth there, landing at $129.9 million.
So broad-based growth, which is good to see. And operationally, how are they looking? Margins?
Very strong. They maintained a non-GAAP operating margin of 45%. Yeah. That's really efficient. Speaks volumes about their model.
45% is impressive.
It is. And another key thing to watch is normalized billings. This gives you a better sense of, future revenue momentum, smoothing out the bumps.
Right. Forward-looking indicator.
Exactly. And that increased a solid 10% year over year to $666 million. Plus, they're sitting on a huge pile of cash and short-term investments, about $6.4 billion.
Need some options.
A lot of options. Financial flexibility is definitely not an issue.
Okay, strong financials, good margins, healthy billings. How did management translate that into their outlook? Did they raise guidance? That's always a key signal.
They absolutely did. And that really signals confidence, right? They bumped up the full fiscal year 2026 guidance.
What are the new numbers?
Revenue now projected between $3.134 billion and $3.140 billion. Non-GAAP operating income around $1.388 billion. That implies a still very strong 44% margin.
Still high.
Yep. And non-GAAP EPS projected around $7.78 for the full year.
And for Q3 specifically?
For Q3, they're guiding to $793 million in revenue and 1.95 cent non-GAAP EPS. Veeva basically said, look, all our metrics beat our previous guidance.
Okay, so management feels good. They see strong execution, a solid pipeline, even with, lingering macro uncertainty out there.
Exactly. It suggests things are firming up for Q3 and Q4 from their perspective.
That's quite a positive signal. But maybe the biggest news wasn't just the numbers. The CEO called it the biggest news in commercial for a long time. Yeah. The IQVIA settlement, this has been hanging over them for ages. What exactly happened and why is it such a big deal?
It's huge. Transformative, really. So this decade-long legal battle with IQVIA, it's over, resolved.
Finally.
And critically, it eliminates these data use restrictions that have hampered VAE for years. The CEO literally called it a hole in our boat.
A hole in the boat, meaning they couldn't fully use IQVIA data in some key products.
Exactly. Things like their Veeva Network and Nitro offerings, they faced limits on incorporating IQVIA's data. Now, that barrier is gone. Seamless integration is now possible.
So a major competitor, IQVIA, is now becoming a partner.
In many ways, yes. It's not just a legal truce. It fundamentally changes what Veeva can offer. It enhances their commercial cloud, sure, but it also positions IQVIA as a CRO partner, that's contract research organization, for Veeva's clinical trial software, Veeva EDC.
So it spans both commercial and clinical.
It does. It allows both companies to play to their strengths. It's a really interesting strategic shift.
How are customers taking it? This must be significant for them.
Oh, hugely positive reaction. Manager described it as overwhelmingly positive. Customers feel a sense of relief.
Relief, interesting.
Yeah, relief and excitement about new possibilities. Things they couldn't do before because the data wasn't fully integrated. It lets Veeva offer a truly unified commercial data platform now.
Makes their whole ecosystem stickier, I imagine.
Definitely. It's a strategic lock-in. Harder for competitors to make inroads when Veeva can offer this complete view. Now, they did say don't expect a material revenue boost this fiscal year from it.
Okay.
But it's expected to be a significant contributor in the coming years. It really strengthens their long-term position.
Makes sense. A foundational shift. Okay, so IQVIA is a massive strategic win. What about their other big bet? AI. Veeva AI. What's the latest there? They've been talking about this Agentic AI.
Right, Agentic AI. These are AIs designed to actually do things, interact with systems, make decisions, and it's moving quickly.
When do we see it?
The debut is planned for December. It'll be in Vault CRM and their commercial content applications first.
Okay, starting soon then.
Yep. Then throughout 2026, they plan to release agents for clinical, regulatory, safety, quality, and then clinical data agents in 2027.
So a phased rollout across their different Vault suites.
Exactly. The vision is pretty ambitious. The CEO talks about a fundamental shift where users interact with agents and agents interact directly with the content and data, automating workflows in new ways.
How do they plan to make money from this? And is it going to impact the numbers soon?
Good question. Monetization strategy is twofold. Selling the platform for customers to build their own custom agents. But the main focus is selling Veeva's own industry-specific agents.
Okay.
But they're being cautious on timing. They expect it to create billions of dollars of value for the industry, boosting efficiency.
What revenue?
But no material revenue contribution expected in fiscal 26 or 27. They're focused on early adoption, proving the value first. It's a long-term strategic play, not a short-term revenue grab.
Building that foundation, what gives them confidence they can win in AI for life sciences? It's getting crowded. They talk about a right to win.
Their structural advantage, that's the term they use. And it comes down to their existing footprint, meaning they have around 50 deep industry-specific applications, the Vault platform, that are already the systems of record for so many processes in life sciences.
So they can embed the AI right into the existing workflows.
Precisely. It's not a separate AI tool users have to jump to. It's integrated right where they work, like a copilot. Plus, they mentioned agent-to-agent interoperability with other big systems like SAP or Workday.
Ah, connecting the dots across the enterprise.
Right. That deep integration combined with their industry-specific data and knowledge is what they believe gives them that advantage.
Makes sense. Okay, powerful story on AI, even if the revenue is further out. Let's switch gears to something more immediate. Vault CRM versus Salesforce. How's that migration going?
That's still a key battleground.
Yeah.
Veeva sounds pretty confident here. They reported over 100 Vault CRM customers are now live.
Okay, 100 live.
And crucially, 9 of the top 20 global biopharmas are now committed, including verbal commitments.
Yeah.
2 of the top 20 are already live in major markets.
How does that stack up against Salesforce in that top 20 cohort?
Veeva management pointed out that Salesforce currently has, they believe, 3 top 20 verbal commitments. So 9 versus 3 in terms of commitments. And Veeva already has top 20s live.
That's a significant lead, especially the live part. What about implementation speed? That's often the killer for big CRM projects.
Yeah, and Veeva is highlighting speed as a big differentiator. Those top 20 customers they have went live in major markets in under 2 years.
That's pretty fast for big pharma.
It is. They contrast that with Salesforce, where the earliest projected top 20 go live in just a single region isn't expected until late 2026. Full global implementation might stretch into 2029 for Salesforce clients.
Wow.
Veeva even mentions, sort of cheekily, that some Salesforce customers have Veeva lined up as the contingency plan.
Ouch. That suggests concerns about execution risk on the Salesforce side?
It does. And moving to Vault CRM also gets Veeva out from under the old OEM agreement limitations with Salesforce, giving them full control over development.
Right. So better momentum, faster implementation, more control. Seems Vault CRM is gaining traction. What about other areas like Quality Cloud? Still a focus.
Definitely. They specifically called out Quality Cloud as getting elevated internal focus, seen as a major growth area. They're expanding into LIMS, laboratory information management, batch release, validation management, building out a full quality suite.
And what about those horizontal software ambitions I talked about last year, moving beyond life sciences?
Still on the roadmap. They're taking a platform-first approach, using CRM as the initial application for horizontal markets.
Yeah.
Early talks with potential customers are happening.
Any timelines?
Expecting maybe 1 or 2 projects to start this year, but they flagged their Investor Day in October for more detailed updates. They still believe their product excellence culture can succeed where others have struggled in horizontal software.
Interesting. Okay, one more product area before we zoom out. Crossix, their data analytics suite. How's that performing?
Pretty strong, actually, particularly a newer part called the Audiences segment. It's usage-based, driving higher growth and gaining market share.
Good.
They're also making headway in measuring marketing effectiveness specifically for healthcare providers, ACP marketing. One product, Compass Prescribers, faced a bit of resistance to change, which isn't uncommon.
Yeah.
But early adopters are apparently giving positive feedback now.
Okay. And the big picture, macro environment, tailwinds, headwinds.
Largely supportive tailwinds, actually. You've got large pharma R&D spending generally rising. Global medicine spending is projected to accelerate. And there's this belief that AI could help shorten drug development cycles.
All good for Veeva's market.
Right. And despite general economic uncertainty out there, Veeva sees a stable environment for their customers. Life sciences seems pretty resilient. That stability is what allowed them to firm up that Q3, Q4 outlook.
Okay, so let's pull it all together. Stepping back, what's the key takeaway for you, our listener, about Veeva's strategy and where they stand now?
I think these Q2 results really show that Veeva's multi-year transformation is working. They're moving successfully from just being a CRM provider to this comprehensive platform plus data plus services partner for the entire life sciences industry.
And that IQVIA deal feels like a cornerstone of that transformation now.
Absolutely. It's a true hinge event. It removes a huge competitive barrier that's been there for a decade. It should make their commercial cloud much stronger, much stickier. Yeah. It really cements their leadership position.
While the AI strategy, even without immediate revenue, seems designed to build an almost unassailable long-term advantage.
Exactly. That focus on agentic AI leverages their deep industry knowledge, that structural advantage we talked about. It's about building for the future.
So why the muted market reaction then? Just sensitivity to that GAAP miss?
I think that's a big part of it.
Yeah.
Sensitivity to earnings quality, maybe some profit taking after a good run, and just hitting those very high expectations that were already priced in. The market punished what it saw as an imperfection, even though the underlying story was strong and guidance was raised.
So the competitive dynamic in CRM seems to be tilting Veeva's way with Vault CRM, but the big challenge is executing those large migrations over the next couple of years, right? Fiscal 26-27.
That's the key execution risk, yes. They need to deliver on those migrations smoothly. The macro backdrop is helpful, but investors will be watching execution very closely alongside those near-term financials. The long-term picture looks really compelling, but markets can be short-sighted sometimes.
Right. That brings us to our not financial advice segment. Time to pitch a trade idea. Outrageous, maybe, but plausible, like talking to the investment committee.
Let's hear it.
Okay, so we have this situation. Strong underlying quarter, raised guidance, huge strategic win with IQVIA, clear AI roadmap.
But the stock dipped on a GAAP miss. There's a disconnect.
A potential mispricing.
Intentionally. So how about this? An AI arbitrage alpha straddle.
A straddle, okay. Buying a call on a put. Exactly. Go long a straddle on VEEV options expiring maybe 6 to 9 months out. Strike price around the current level, say $280-ish, where it was trading post-earnings. This bets on a big move, either up or down, but ideally up, given the catalysts.
Okay, straddles can be expensive, though. How do you fund it?
Here's the twist. You help fund that longer-term straddle by selling shorter-term, out-of-the-money call options, say 30, 45 days out, strike price maybe 5% above the current level.
A call spread overlay, essentially. Or just selling calls against the long straddle position. Selling calls naked against the position, that's risky. Maybe structure it differently, perhaps selling puts further out of the money, or using a ratio spread.
Let's stick to the core idea, though. Fund the long-term bet with short-term premium.
Right. The core idea is using near-term option selling to offset the cost of the longer-term bet on volatility and direction. The rationale is the immediate dip on the GAAP miss might be overdone. If the stock stays range-bound short-term, those sold calls expire worthless, collecting premium. While the longer-term straddle gives you exposure to the real catalysts kicking in later this year and next, IQVIA integration, AI agent releases starting December, Vault CRM wins.
Exactly. You're leveraging the market's short-term focus on the GAAP number to finance a bet that fundamentals will eventually drive a significant re-rating over the medium term. It's an asymmetric bet on the strategic story winning out.
Interesting structure. Playing the short-term noise against the long-term narrative definitely fits the outrageous but plausible bill.
So that wraps up our deep dive on Veeva's Q2 FY26 earnings. Solid results, raised outlook, major strategic progress with IQVIA and AI.
Yeah, the initial market reaction was maybe a bit underwhelming, but the long-term story, their position in life sciences, it looks very strong.
As always, remember, any trade ideas we kick around here are purely for illustration. They are absolutely not financial advice. Always do your own homework, your own due diligence before making any investment decisions.
Couldn't stress that enough.
Thanks for tuning in. As you think about Veeva, maybe ponder this. In a world buzzing about generalized AI, how much is that deep, specialized, industry-specific advantage really worth? Until next time, keep digging. The real story is always in the details.